and Iyano. So, like I said, we have two gentlemen who truly know the pension industry, and Osime, who will be the lead participant, lead discussant, is the regional head for Lagos and the Southwest. Is an alumnus of both Lagos Business School and Lagos State University. He is a powerhouse of over 19 years of dedicated experience shaping the pensions industry. He's not just an expert, Osime is a voice, is a leader, and a driving force that drives innovation in the pensions industry. Ladies and gentlemen, I won't be overflowing this issue if I tell you Osime will change your perspective and make you believe that additional voluntary contributions is the way forward in retirement, in achieving your aim to retire in style. Then secondly, we have Iyano Stephen. Iyano is a senior business analyst at Cardinal Stone Pensions and an astute professional with over 8 years of progressive experience in the financial sector. Iyano is instrumental to enhancing operational efficiency, especially in the region where it's covering in the capacity of the head with Cardinal Stone Pensions. Iyano is committed to empowering individuals and organizations to make informed decisions that secure their future. It brings clarity, it brings purpose and measurable impact to every conversation. By the time you listen to him, you will know, yes, Iyano knows his onions. So, ladies and gentlemen, I can assure you that at the end of this session, you'll be more than convinced to take up the voluntary contributions arm of your retirement savings very, very crucially. Now, let me quickly take your mind off the webinar before you, and let's cast our mind to 10, 20 years ago. Now, good. Remember NTA News then when our parents, the retirees then used to protest at national TVs for their pensions and all that. You know, that scenario actually depicts hopelessness. Why? Because most of them are exposed to elements like rainfall, sunshine, all in a bid to fight for pensions that actually rightfully belongs to them. But you and I can attest to the fact that the narratives have changed today. And that simply says that pension is working. Now, we are here now to make you know that you cannot just retire, but retire in style and comfort. And this webinar is aimed at ensuring that you make the smart moves that will make you lounge at retirement. Now, let's take our minds back to the webinar before you. I'll quickly run through the table of contents for today's webinar. One will be speaking on that. Osime Odige will be speaking on the legal framework and the background to voluntary contributions, features of voluntary contributions, rules guiding voluntary contributions, benefits of voluntary contributions, how to make voluntary contributions, and how to access your money through voluntary contributions. Part 2 will be handled by Osime and will be handled by Iyano Stephen, I beg your pardon, and we'll be speaking about Cardinal Stone Pensions, who we are, our core values, and industry updates. Cardinal Stone Pensions is well positioned to keep you informed all the way through to retirement, and not just retirement in style. And the part 3 of this webinar will be the Q&A session, where we'll do justice to all your questions, your inquiries, and we'll make sure all anxieties are quietened down. Now, before we move forward, let's quickly observe some house rules. Please remain muted. And if you have questions, kindly drop them in the chat box. We'll pick them one after the other, and our panelists will do justice to all questions. Please, like I said, let's maintain house rules so we all can receive value and we'll make our time count for what it is worth. So thank you so much, ladies and gentlemen, as we welcome Osime Odige. Osime, good morning. Are you there?
I'm here, Tosin. Good morning. Thank you so much for the introduction.
You're welcome. You're welcome. Yeah. Nice having you. Over.
Thank you. Okay. I'll share my slides now so that I can start the presentation. Okay. Ladies and gentlemen, I'll probably be starting with the voluntary contribution. But before I start with the legal framework, I will also briefly define what voluntary contribution is. I know we all know what voluntary contribution is, so let me just quickly define that and say one or two things before I go to the legal framework of the contribution, contributory pension scheme that we're talking about. What is a voluntary contribution or additional voluntary contribution? Additional voluntary contribution is extra funds that you add to your mandatory contributions that you do in pension. It is an additional funds that, individuals like me will decide that, okay, on a monthly basis, let me add a specific amount to what my mandatory pension contribution is in order to, achieve a certain retirement goal. That is what additional contribution, voluntary contribution is all about. It is voluntary. It is any amount that you decide, that you can add. And, they also have time frames of those addition, monthly, quarterly, depending on you. But let's come back to this framework. The framework of the pension contribution that we're talking about. If we look at the framework, if we take section 1, 2, and 4, section 1 is telling us the reason why the pension contribution is created in the first place, was created in the first place, to cater for our livelihood when we grow old, during old age, so that we get some extra funds that we can use on a monthly basis, quarterly, depending on how we decide that we want to get this fund at old age. This section 2 is also talking about, the contributory pension scheme as it applies to the various employees that can do it. Those who work in the public sector, those who work in the private sector, the public sector of the federal government, the public sector of the state government, public sector service people of local government, and private sector people. It does not just stop there. It also goes to those employees. Employers that have 3 employees can also do voluntary contribution. Micro pension contributors can also do voluntary contributions. When we say micro pension contributors, those are people, the informal sector market, those who run their business as associations, run their business as an individual. They can also do, voluntary contribution. Then now, why that voluntary contribution? Why was it created? The Section 3 of the Pension Reform Act 2014, provides a platform that, RSA holders, yes, they make a mandatory contributions, but will that mandatory contributions be enough for them to be able to take care of themselves at old age? Well, some can say, oh, yes, let me just use that and manage. But some say, no, look, I'm planning my retirement. I must have a specific goal. I also want my funds to be more than what I will get with the mandatory contributions. And that was the essence of the voluntary contributions being created. And that's Section 4 of the Pension Reform Act 2014. It is there. And that was why it was created. Now, I'm going to go straight to the background. The background of the voluntary contribution, what is it talking about? It's talking about the reason why the voluntary contribution was created. Saving for retirement has become something that everybody looks forward to, so that, most especially in this part of the world, Nigeria, you decide to say, okay, I'm doing voluntary contribution. I want this social amount I'm getting. Let it be something that will take care of me more, better when I'm old. And hence, the PENCOM, the National Pension Commission, the regulator decided that, look, in order to achieve these goals, where people would get more funds, where people would be able to say, okay, let me save extra, and tax benefits on it, they introduced the concept of voluntary contributions, providing workers with the opportunity to increase their retirement income. They have the mandatory contribution, which is 18%, 10% from the employers, 8% from the employees. That's 18%. Then as employees, you can do extra. You can decide to say, okay, every month, take a certain amount of money and pay into my pension account every month. You can also decide to say, okay, let's do that every 3 months. Let's do that every 6 months. Let's do that every year, once a year, depending on you. That's the background of the voluntary contribution. And that was how voluntary contribution came about. Now, I'll go to the futures of the voluntary contribution. Now, when we talk about futures, we're talking about what makes this kind of contribution unique. What does it give to us as clients, as those of us who are doing the mandatory contribution and we want to do voluntary contribution? Why should we do it? Features of voluntary contribution: flexibility, tax benefits, increased retirement savings, flexibility in withdrawals, financial securities. You have had flexibility twice. The mandatory contribution part, it is not flexible. They have certain rules that guide them. Those rules, when you have worked 35 years or you are 50 years, you can access them. You cannot, it's not flexible. It's not that, oh, let me wait 1 year, 2 years, then I can access them. But for voluntary contribution, features like this, when we talk about flexibility in amount, we are talking about the contribution amount and the contribution frequency. When I talk about contribution amount, I'm talking about, oh, I'm saying, oh, they've taken 18%. My HR, please do 20,000 for my salary, do 50,000 for my salary, do 100,000 for my salary every month, every 3 months, depending on you. But whatever you will be contributing cannot be more than 1/3 of your salary. It's either you do 1/3 of your salary or less than 1/3 of your salary. It cannot be more than 1/3 of your salary. So it's extra funds just to make your retirement benefit at the time you are retiring better. Then I've talked about contribution frequency, monthly, quarterly, every 6 months, depending on you or how you want to do it. Some do once a year, some do once in 2 years, some do once in 6 months, depending on you. Then we come to the second feature of voluntary contribution, tax benefits. When you talk about tax benefits, you look at the potential tax savings and you look at tax deferred growth. When you say potential tax savings, it means that you are saying, oh, from my salary, take extra more pension contribution, which we call the voluntary contribution, before your salary will be taxed. The mandatory contribution is taken before your salary is taxed. If you take only the mandatory contribution, you don't do voluntary contribution, whatever is left will be taxed and you see it. But if you now decide to do extra voluntary contribution, you are doing voluntary contribution, the tax on your salary will reduce because they will take the voluntary contribution money out first before your salary will be taxed. So you are saved on your tax savings. Then we talk about tax deferred growth. This voluntary contribution has a rule, and the rule is that once you do voluntary contribution, you must do it completely for 1 year. After 1 year, you can assess it. But even if you assess it after 1 year, it will be taxed. But the tax would have been deferred. It's not so complex. But you can also decide, oh, let me leave it for 5 years. After 5 years, it is tax-free. Nobody will tax that funds. You get your funds and the growth that has accrued, the interest that has accrued on it after 5 years. You will get that retirement and nobody would tax it. Then another feature of voluntary contribution is it increases retirement savings, boost your retirement income, and help you to meet your financial goals. How does it boost your retirement income? Okay, your mandatory is 18%. Let's assume that 18% is 200,000 employee. That's what you do every month. And you now decide that, oh, by the time you calculate that, you see the total sum that you get. But you now decide that, please, let me do extra. Every month from my salary, take 50,000. And the 50,000 they take every month is the voluntary contribution. And the voluntary contribution is also being invested, is also being run like the mandatory. And the interest will accrue. You will see the growth on your interest if you have your statement. And you see it. And that would help to boost your retirement income at retirement. Then meeting financial goals. If you decide that, look, at retirement, by the time I do my calculations, I want to get 20 million by the time I retire and all that. But I want the money to be 30 million. That's another way to increase that money to 30 million by doing voluntary contribution. So voluntary contribution is very, very key. This is one feature. Then another feature is flexibility in withdrawals. What do you mean by flexibility in withdrawals? Unlike mandatory that you cannot take until when you retire, and you take lump sum and monthly program withdrawal. In this, you can decide to say, oh, I have contributed for 2 years. I want to take 50% of my voluntary contribution funds. You can access 50% of your voluntary contribution funds, and the other 50% will be paid to you to retirement. That is what boosts your retirement income. So there are partial withdrawals. You can decide that, no, I want to leave the whole money until I retire. Yes, fine, that's your personal decision. But you can also decide that, look, I need some funds to do some things. Let me take 50% and leave the other 50% and continue the voluntary contribution. Then it also augments your retirement benefits. That's what we have talked about. The other 50% will help boost your retirement income. Or you can decide to leave all your funds and take it at retirement. Then when we talk about financial security, it's one key feature of voluntary contribution. It helps your funds it helps your planning of your retirement funds for you to be financially stable. For you to say, okay, yes, this is what I plan that I'm going to do as my total contribution by the time I retire. And I've met that with the voluntary contribution. And you also discuss this with your PFL so that you also have a way to calculate and know what your financial plans and your financial goal will be at retirement. So it helps to I'll move to the rules. Voluntary contribution is just not, PENCOM has introduced it. We are contributing, and at the end of the day, we will take our money. No, it doesn't just work like that. There are rules guiding voluntary contribution. And these rules are simple. These are rules that you can also adhere to, and it makes it more interesting. It makes it more valid and strong. One of the rules is funds shall be made only in Nigerian currency, naira. Yes, because it is being done in Nigeria, you must be an RSA holder. The funds can be done in Nigerian currency naira. But it does not mean that if you're abroad, you cannot do voluntary contribution. If you have a pension account in Nigeria, you can. If you have a pension account in Nigeria, you can do voluntary contribution, and that is by converting that pounds, euro, or dollar to the Nigerian currency, naira, and pay into your voluntary, and ask your employer to pay into your voluntary contribution account, into your RSA account, into the voluntary contribution part. Then two, another guidance is that it shall be remitted into and withdrawn from a duly registered retirement savings account. You see, you must have a retirement savings account managed by a licensed pension fund administrator, managed by a PFA. You must have a retirement savings account. If you don't have a retirement savings account, you cannot do voluntary contribution. The first thing is you have a retirement savings account. You see the third rule that will say, look, all eligible contributors shall maintain his or existing RSA. While new contributors shall open a retirement savings account any period of their choice. So if you don't have a retirement savings account and you want to do voluntary, you must open a retirement savings account to do voluntary contribution. Those are the simple rules. Another rule is this: you must pass it through your employer by writing of your intention to do voluntary contributions, to make voluntary contributions. Also, the amount that you want to be deducted from your money and also remitted as voluntary contributions. You must write, it must come through your employer. You can't just say, oh, I want to do voluntary contribution, let me go and pay in the bank myself. No. It must come through your employer. You must have a retirement savings account. And you must state, that you want to do, and what amount on a monthly base, quarterly base, everything, depending on you, on your choice, how you want to do it through your employer. Then 5, and the employee, whoever is involved, must have a legitimate income. And having a legitimate income, you must pass through your employer. That means whatever you are going to be contributing cannot be more than 1/3 of the month's of your month's salary, in line with the Labor Act 1990. It must come through your salary, come through your employer, or come through your business, but it must not be more than 1/3 of your monthly salary. Another rules guiding voluntary contribution: all voluntary contributions must be remitted through an employer. I've said it. We cannot overemphasize that. It must come through an employer into your retirement savings account. But in your statement, you will see your retirement savings contributions, and you must see your voluntary contribution. Voluntary contribution column is there, and it states whatever you are bringing. Those who contribute will see there, and the interest and growth that accrued over it. Now, we also said the frequency of voluntary contribution shall not be more than once a month for RSA categories of contributors. It cannot be more than once a month. You cannot say, oh, let me do on the 10th and come on the 20th and pay again. No, it must only once a month. Once a month, once every quarter, once every 6 months. It must be once a month. And you do it monthly. Then micro pension contributors can also decide how much and how often they want to make their contributions, which could be daily, weekly, monthly, or occasional. These are micro pensions. Micro pensions are the informal sector market. Those who run their business through associations, barbers, vulcanizers, shop owners, they are called micro pension plan contributors. And these ones can also decide how much they want to do and how often they want to do. Another guiding rule is this: you inform your employer to take your voluntary contribution to be remitted into your RSAs. And your employer does not remit, and after deducting, there are penalties with attacking penalty from the commission, from a regulator, because they monitor this and they know these are future funds and they strictly monitor it. They take those funds and they don't remit, there are penalties. According to the Pension Reform Act 2014, on behalf of the contributor by the employer, the commission will take actions immediately. Then something else again, one of the guidelines is that for active contributors, your voluntary contribution section of the RSA will be divided into 2. 50% shall be for contingent available for immediate withdrawal. Then 50% for fixed pension shall only be utilized at the date of retirement to augment pension. See, you cannot, if let's say you are doing voluntary contribution and you have saved 500,000, you cannot say, oh, I want to take this money, let me take the whole 500,000. No, 150,000, which is 50, will be given to you immediately for whatever you want to use it for. What the other 50% will be kept until when you are about to retire. And which makes it even better because even if you have taken that 50%, you can keep contributing into this one to take it at retirement. So whether you withdraw at any point in time to take the 50%, it does not affect your plan, your future plan on how you want to increase your contribution or what you want to get at retirement. It just makes it all more interesting and beautiful so that you can take some funds and leave some funds till when you retire. Now, what are the benefits of voluntary contributions? With everything that I've been saying, you probably would have picked one or two interesting benefits of voluntary contribution. And I'm sure that you would also have been able to see that, look, voluntary contribution is something that I, that is remitting for pension, must do. It's an extra income to augment my pension at retirement. What are the benefits? Enhanced accumulation of pensions savings. One, that is one of the key benefits of voluntary contribution. It enhances your accumulation of pension savings. It enables the individual to rapidly build up their pension savings during working years and helping them to meet their retirement income goals. Employers can decide the level of contributions they want to do, but it will help you to meet your retirement income goal. The essence of the extra voluntary contribution is to meet your retirement, income goal. To say, okay, at the end, when I'm retiring, let me get to instead of this, let me, boost my retirement money. That's one of the benefits of voluntary contribution. Another benefit of it is that flexibility in making contributions. It's another benefit. It's not like when they say, 18%, then you begin to say, let me do 18%. Oh, no, you decide the amount you want to do. You decide that, let me take this social amount and pay into my retirement savings account as my voluntary contribution so that it helps me boost my total income at retirement. Voluntary contributions offer contributors the flexibility to decide the amount and the frequency of their contributions. Contributions can be made monthly, I have said it, quarterly, biannually, or annually, depending on you. Contributors, you can even start and stop your contributions at your convenience. You can even increase that you do depending on, as it is needed, depending on the situations around you at that time. You can increase it, you can reduce it, depending on you. That flexibility is there. Then another benefit of voluntary contribution, tax incentives. When we talk about tax incentives, voluntary contribution lowers a worker's overall tax liability since they are deducted from the salary before the payee is taken, before payee tax. This tax is deducted after they've removed your voluntary contribution, they've removed your mandatory contribution. This is when they tax whatever is left of your salary. And this voluntary contribution helps you to reduce that tax that you pay, the payee tax that you pay. These are unlikely savings. It's different from regular savings. Very different. And another sweet benefit is if you decide to say, okay, let me leave the voluntary contribution and keep doing it for 5 years. No tax will be applied to the amount withdrawn. No tax. Even if you want to take the 50%, if you want to put it at retirement, no tax will be applied to it. It's just the money would have grown plus interest and no tax will be applied to it. Another benefit is inclusion. It involves everybody. Those who are doing the old scheme, those who are doing the new scheme, and retirees. It involves everybody. The contribution is available to all workers, including retirees under the defunct benefit scheme, and those under the CPS. If you can retiree, and you now get a contract that you want to do, and you want to do your pension again and boost your pension, you can come in and begin to pay. When you pay at that level, it goes in as voluntary contribution. It goes in as voluntary contribution. So everybody is inclusive in this. That's one of the benefits of voluntary contribution. In essence, voluntary contributions offer a flexible and powerful way to enhance retirement savings and achieve financial goals, while also providing tax advantages and opportunities for early withdrawal. In fact, these are summarized the benefits of a voluntary contribution. These are summarized the benefits of additional voluntary contribution. So this benefit should also help us to think through and help us to make up our minds that, oh yes, I have to do voluntary contribution. Now, how to make voluntary contribution? You'll probably be asking the question that, how do I make voluntary contribution? They are said this benefit and all that, but how do I make it? These are the simple ways to make voluntary contribution. Remember, during my presentation, I already told you that voluntary contribution was through your employer. And how? You must notify your employer in writing about your intention to do voluntary contribution. and also the desired amount that you want to pay, either on a monthly basis or annual, quarterly or annual, depending on you. And how does it, when your employer gets that, your employer wants to pay, your employer shall upload the schedule of contribution capturing the employee's voluntary contribution alongside the statutory contribution. I tell you, it goes into your RSA. Your RSA already have the statutory part of the contribution. Then your employer will now put the employee's amount that you have decided that to pay alongside that, and the contributions to the preferred payment service, support service providers. You know, that's what they're using now. You know, payment support service providers. Now, like now, for cardinal stone pensions, upon receipt of such payments, we credit the RSA accordingly. And once you see your statement or your alert, you see the employer-employee contributions. You also see your VC contribution. It's stated in the SMS you get from us. And also, it is in your statement. The micro pension contributions can also make their contributions through USSD or walk into any of first bank, which is like first custodian, or through remitter by InterSwitch. That's another way to also make your voluntary contribution. Then we have said that there are rules also guiding this. The Nigerian Drug Law Enforcement Agency will also be notified there is any voluntary contribution lodgement of 5 million, so that also I can contribute any amount now. I'm earning 10 million every month. Let me do. If there is a single voluntary contribution lodgement of 5 million and above, it must be reported by the PFC. The PFC will report to, so that they can investigate and be sure that this is genuine. So we also have to be careful. Then all voluntary contributions are managed by PFAs, held in custody of the pension fund custodians. I am sure you all know that the custodians that hold the funds, while we invest and manage the funds. And so the PFAs invest and manage the voluntary contribution in strict compliance with the regulations issued by PENCOM governing pension funds and assets. And how do I assess voluntary contribution? If I have done all this, I have told my employer, please take social amount, remit for me, and they are doing it, you are seeing it on a monthly basis, and oh, it's about time I want to retire, or I want to access 50% of the fund. I need it after a year, after 2 years, after 3 years. How do I do that? I will explain it here. You know, assessing your voluntary contribution is super fast, easy and fast at Cardinal Stone Pensions. You know, at Cardinal Stone Pensions, the benefits are processed and clients' accounts are credited within 72 hours of receiving benefit applications. There are beautiful stories, illustrations I can use to say people who apply for their benefits get it within 72 hours, some even before 72 hours, and they are marveled and are like, wow, is this what pension is doing right now? And the truth is that that's what pension is doing right now. Cardinal Stone Pension in particular. Here are simple steps to access your voluntary contributions with ease. First of all, you log into our RSA portal and select voluntary contributions from the menu. This is online. You go online, fill the online request form with the required details, and you know, once you fill and you attach, you send. It is processed. Another way you can also access it is by sending a mail to pensions@cardinalstonespensions.com to request for a checklist to guide your application process. And what are those checklists? Once you have gotten those documents, a valid ID card, bank details, your passport and all that, those are things you upload. Once you upload those things, and once you upload, it is being reviewed, confirm your submission. While waiting to confirm, you get a confirmation email or SMS from our team, that it's been processed and all that. And within 72 hours, your funds will be transferred to the designated bank account that you have given us that is being approved. After approval, it is that simple. Within 72 hours, you get your funds. It is very simple to access after you've saved, you know, your voluntary contribution. Thank you all. And I hope with all this, by the time you are living here, by the time you are done with this webinar, a lot of us will make up our mind to begin to do additional voluntary contribution. It's our savings for future. It's our savings that would help us in the future. It's our savings that would also help us meet our financial goals. It's our savings that would help us to be happy at retirement. Thank you very much. Tosi, over to you.
Thank you so much, Osime. That was quite insightful and I'm sure very impactful. Thank you. Osime has been able to make us know what additional voluntary contribution is all about. It talked about the features of additional voluntary contributions and how you can bring it aside your regulated pension contributions, which is the minimum 10% and from the employer and 8% from the employee, it has made us know that you can actually do more. So those funds you are keeping aside, and some people, become susceptible to MMMs and all that, thereby losing their funds. You can actually make those funds work for you now and in the future. And Osime still made us understand that yes, there are some regulations around voluntary contributions, regardless of what you do, where you work, in as much as you are concerned about retirement in style and in comfort, you can as well adopt voluntary contributions. Thank you so much, Isime. Thank you. Please stay tuned. Please, our tech team, you're welcome. Can we have the poll? Can we have the poll on our screen now? If you have been on this call this far, if you've joined us from the inception, there's a poll on your screen. Please kindly indicate, right? Will you make additional voluntary contributions moving forward? We want to test this to know if people have actually received value, if we've been able to convince you that those funds you are keeping with Alajo, that some of them might eventually jackpot. Please pardon my language, that is the Nigerian. So instead of people jackpotting with your money, instead of MMM going away with your money, why not invest this money? And you can access part of it, you can access whole of it, depending on the way you have planned your life and your retirement. So please click on this poll, and we'll make sure that the results of the poll are actually shared, and we'll see how people are doing and how people are concerned about their retirement. So while that is ongoing, I want to introduce us to our second speaker. I had talked about him, Iyanu Stephen. Iyanu, say hi. Are you there? Iyanu?
Hi, good morning, Oluwatosin. Good morning, everyone.
Thank you. You're loud and clear. I'm yet to your visuals, though. All right. I guess the poll is actually obstructing it. It will go off, right? We are trying to take people's feedback concerning adopting additional voluntary contributions as against, not it's not saying you're not planning, right? You are planning, but you are being more intentional about your plans towards retirement. That is what additional voluntary contribution is just about. It's just retirement in style, the smart way. So Ian will be taking us through what Cardinal Stone Pensions is all about, what we do, our vision statement, our corporate statements in generally, and industry updates that you might have missed one way or the other. Remember, Cardinal Stone Pensions is not just customer-centric, but we are driven by information. We know that when we keep our clientele informed, then they can make informed decisions that guarantees their retirement. So Ian will run us through this in the next 30 minutes or less, hopefully, because Ian is very analytical, right? Then please just take this moment, even as you are listening to them, please press the like across all our social media touch points, LinkedIn, Facebook, Instagram, and X, formerly Twitter. Please press the like and follow Cardinal Stone Pensions. Thank you once again. Ian, over to you. Please, our tech team, can we take the poll? I believe we've gotten feedback. All right. Thank you.
All right, thank you very much, Tosin, for that wonderful introduction. Once again, my name is Iyanu Stephen, and I also want to say a very big well done to the first speaker, Osime. He has done justice to the subject before us this morning, which is the voluntary contribution. And I believe and trust that after this session, we'll have a lot of person subscribing for this very voluntary contribution. But moving forward, I'll be taking us through on who we are as a company, as Cardinal Stone Pensions. We don't just we didn't come out of the blues. We've been here, and so I'll be taking us through on who we are, what we've been doing before now, what we are doing currently, and our value proposition to you as our clients. Now, you agree with me that there's no great institution or successful organization out there without a story. And for us in Cardinal Stone Pensions, our journey is that of a vision, resilience, and transformation. What do I mean? Now, in the year 2008, when the contributory pension scheme was still trying to take root, we got licensed by the National Pension Commission, that's PENCOM, to become or operate as one of the pension fund administrators in Nigeria to deliver value to the Nigerian citizens. But then we didn't get this license under Cardinal Stone Pension. We got this license under the former Radix Pension Managers. I believe a lot of us who has been with us from beginning, we know that we started as Radix Pension Managers. Now, moving forward, in the year 2024, that's 2024, the Cardinal Stone Group saw the need, to improve the pension landscape, improve value propositions for our clients, and they decided to acquire a majority stake in Radix Pension. And in February 2025, we branded the name to what we have today as Cardinal Stone Pensions. Cardinal Stone Pensions, delivering value and excellent customer service to all of our clients. But we didn't stop at rebranding. We also have our customers in mind. And what do we have in mind for our customers? One is in our vision. What is the vision of Cardinal Stone Pensions? Now, the vision is to be the most preferred pension fund administrator in securing the future of our clients. To be the most preferred pension fund administrator in securing the future of our clients. What is our mission statement? Our mission is to enable financial well-being and retirement readiness through innovation, exceptional service, ethical practices, and sustainable value creation for our clients. And believe you me, we are doing just that for our clients. I also want to mention that Cardinal Stone is one of the fastest growing PFA currently in the country among the 20 PFAs we have in Nigeria. And we are a non-banking PFA doing exceptionally well, leveraging on the ecosystem of the Cardinal Stone Group. Now, Cardinal Stone Group is an independent multi-asset full service investment banking firm offering all kinds of financial services that you can imagine. So we'll also be speaking on that shortly. Next, on who we are in terms of our products. Now, there are key products that we offer, just like other PFAs. Now, one of those products we offer is known as the Retirement Savings Account. Now, of course, retirement savings account is the reason for setting up the contributory pension scheme in 2004. Now, why the retirement savings account? Now, it's expected that for everyone who is employed under the public sector, private sector, and even what we call self-employed now, will have access to what we call a retirement savings benefit. And this service we offer, it is expected that once you are employed, as you begin to earn your monthly income, 18% of the total of your basic housing and transport allowance is deducted and remitted into this retirement savings account. You will open with Cardinal Stone Pension, or you have opened with Cardinal Stone Pensions already. And this is remitted into that account on a monthly basis, right from the start of that job till the very end when you are retired. And so what we do is that we offer a flexible, reliable way to save for your retirement, ensuring that you have stable income at retirement. The reason being that we believe that no one can work for life. It therefore means that it will get to a certain stage or a certain point in your life that you will need to retire or stop working. At that point, your retirement savings account serves your retirement with peace of mind. Secondly, among the key products that we offer is known as voluntary contribution. Voluntary contribution, which is the main subject of this webinar today. And Osime has, given us an insightful lecture on that. But then just to add to what he has given us out. Now, voluntary contribution is the excess of the minimum of 8% we are supposed to contribute into our retirement savings account. an addition to the excess of the minimum of 8% you are supposed to contribute into our retirement savings account. Now, I'll give you an example, just so that we understand this voluntary contribution very well. Now, you are employed the same day with, let me say Mr. A and Mr. B were employed the same day, making the same pension remittance and work for the same number of years. Now, Mr. A started contributing, but without voluntary contribution, while Mr. B also started contributing the same amount Mr. A was contributing, but was adding an additional 20,000 or 50,000 as voluntary contribution to the mandatory contribution he is making. Now, after 20, 25 years or 35 years, as the case may be, you believe with me that if Mr. A is, retiring with 15 million, now Mr. B will be retiring with something higher than that, probably 20 million, based on the compounding interest that's put into his retirement savings account. Now, what that means is that when it's time for these two persons to process their benefits, now the lump sum that Mr. A will be going home with will be lesser than the lump sum Mr. B is going home with. Why? Because of the additional voluntary contribution that Mr. B came into or subscribed into at a very young age when he started working. So this actually speaks to the importance of voluntary contribution. And we in Cardinal Stone help you and walk you through this process, just like we are doing right now, to ensure that you subscribe and make an informed decision as regards to this, as touches this voluntary contribution. So the voluntary contribution applies to an existing RSA holder intended to boost his or individual retirement savings account. I would also like to mention here that if you have a project probably in 2 years, 5 years, or 10 years time, why not? You can key into this voluntary contribution and start making that contribution on a monthly basis. And trust me, when you will need that funds, 50%, including the return on investment, will be paid to you, will be processed and paid to you for you to do whatever project or program that you have in the future. Now, next is what we call the micro pension scheme. Micro pension scheme. Now, if you remember my definition when I was explaining what retirement savings account is, I said it's an account that allows both persons in the public, private, and even self-employed, to save towards their retirement. Now, micro pension is specifically designed to help people in the informal sector. Who are those in the informal sectors? We have traders like the market women you have out there, the tailors you have out there, the barbers you have out there, the downfoot drivers you have out there. Now, these are traders that you have out there. Now, micro pension is designed for these persons, for artisans, for professionals in organizations with less than 3 staffs. Micro pension is designed for you. And just like voluntary contribution, micro pension is flexible. Flexible in the sense that the client or the customer is at liberty to contribute whatever amount he or she deems fit, either daily, weekly, or monthly. So you keep contributing this amount into that micro pension account. And then the beautiful thing about micro pension account is, because we know that at some point in business, you will need funds. You will need money to probably do 1 or 2 things or quickly throw into that business. Now, micro pension is designed in such a way that you can have access to 40% contingency withdrawal. What this means is that at any point in time, you can withdraw 40% from your micro pension account to do whatever thing you want to do or attend to whatever need you want to attend to. And then the remaining 60% plus what you'll be contributing from that time will now be kept, managed for you until you are retired. Like I said, a time will come that you, who is a trader here, or you who is contributing to this micro pension, will not have the strength to go to that market to trade. You won't have the strength, to do that job you're doing. So you will need to retire. You will need to rest. At that point, your micro pension plan, keeps you going. Why? Because we don't want any of our customers or anybody on this call today to be a liability to his family member, to be a liability to the society. And that's why we're encouraging everyone to either key into the retirement savings account, or, if you're not in any formal employment, key into what we call the micro pension plan. Next is the approved existing scheme. Approved existing scheme. Now, this is for those who probably were employed in organizations and the organization had a pension scheme even before the contributory pension started. Now, what we're saying is that the Pension Reform Act also allows those employers and employees, to carry on with this existing scheme. Existing scheme. We have a lot of persons in the public sector who are, carried on with this existing scheme into, the contributory pension scheme. Next on who we are. Now, I would like us to understand here that we have about 20 pension fund administrators in Nigeria. And just like I explained in our chief product, now all of these PFAs basically offer the same product. They offer the retirement savings account, they offer the micro pension plan, they offer voluntary contribution scheme. But what differentiates us, or what sets us apart and gives us an edge over other PFAs, is in our services. In our services. What that means is that we are not just giving you lectures on voluntary contribution. We are here to also offer you good services to ensure that you retire well. Now, what are those key services that we offer? Number one, investment and management of pension funds. Investment and management of pension funds. Now, I will have you understand that as soon as you begin to contribute into your retirement savings account or your micro pension plan account, or even your voluntary contribution account, now these funds are managed by our expert investment team, and then we give you good return on investment. Now, we have experts in Cardinal Stone Pensions that do their research as to the kind of financial instrument that your fund should be invested in, and then gives you what we call competitive return on investment. Now, understand that Cardinal Stone Pension is not a PFA that gives you return on investment in 1 month, and then the second month we drop. No, we are a PFA that consistently gives you good return on investment, not just good, but competitive return on investment, well above the industry average. Now, understand also that it is important that you look at our historical record in terms of our fund performance. Now, when you look at our record, you will discover that we have consistently grown in terms of the return on investment we give our clients. And this is because of the expert team that we have working seamlessly to deliver consistent and competitive return on investment to you as our clients across all fund categories, which I will be explaining later. Secondly, in terms of the services we offer or that sets us apart from other PFAs, is benefit administration and payment. Benefit administration and payment. Now, we deliver benefit accurately, promptly, with exceptional service, ensuring that our clients get exactly what they are entitled to when they need it. Exactly what they are entitled to when they need it. Now, we are not a PFA that makes mistake in terms of competition or in terms of what we are paying out to our clients. We ensure that we give you what is accurate, what you are entitled to, as at when due. As at when due. What this means is that if you enter our office and say you want to process probably your 25% out of job, or your 50% voluntary contribution withdrawal, or even your retirement benefit, what it means is that we are swift, accurate, and we promptly ensure that your funds gets to your account within the turnaround time. Now, in recent development, the turnaround time for processing benefit is 48 hours. Now, within 48 hours, it is expected that a PFA, pays into the pension pension fund custodian, and then within the next 24 hours, the pension fund custodian credits the client. So that's 72 hours. Now, it gladdens me to tell you that we are already doing that in Cardinal Stone Pensions. And we have received testimonies of clients who have applied for one benefit withdrawal or the other. And then within 48, 72 hours, they received their payment and they were like, wow, I wasn't expecting this payment this soon. You mean this is possible? Yes. With Cardinal Stone Pension, it's very much possible. Very much possible. Next on the services that we offer is retirement planning and advisory services. Retirement planning and advisory services. What this means is that for our public sector customers, now we track your account from the moment you open that account down to the number of years you spend working, meaning that we know when you are about to retire. And 6 months before your retirement, we have officers, we have relationship managers who will reach out to you and tell you it's time for you to come for your verification, such that when you are retired, your benefit processing is smooth without hitches. We do your data recapture, we ensure that you carry out your verification, and then you are set for a retirement. Aside that, we also give what we call financial advisory services. Remember, I mentioned that we belong to Cardinal Stone Group. What it means is that we are not just a PFA that is only concerned about your pension. We are also a PFA that is concerned about your financial well-being on all fronts. What this means is that we know that apart from your retirement savings account that you have with us, we understand that you have other finances that probably you need someone to advise you on how to invest those funds. Now, that is where we come in. We help you or encourage you to leverage on the Cardinal Stone Group ecosystem. Now, Cardinal Stone Group is into mutual funds, different kinds of investment. So we guide you through on this investment, tell you what the risks are, and then allow you to make those decisions. And that is where we come in as financial advisors. Financial advisors. We also don't just leave you there in terms of your return, in terms of your pension account as your retirement savings account. We also tell you the best fund for you. Now, we have about 6 fund categories, just like I mentioned earlier. Now, in those fund category, as soon as you are opening a pension account, you are automatically categorized under what we call Fund 2. Fund 2 is known as the average risk investment fund. What this means is that it is not all of your funds that is invested into financial instruments. It is about 50% of your funds that are invested, and then you get what we call return on investment on those funds. Now, but there's another fund that performs higher than this Fund 2, which is known as Fund 1. Now, you move to that Fund 1 by choice. What this means is that Fund 1 also is not all of the funds that are invested, but a portion higher than Fund 2, about 75% of your funds, is what is invested into the market, and then you get return on investment. Now, in this particular fund, it's interesting to know that Cardinal Stone Pension is doing very well. You can check the figures. We are doing very well in this fund. And so I advise all young professionals that are still within the age of 18 and 49, please, you can move your funds to Fund 1 and enjoy good returns on investment. Now, as soon as a client is 50 years, these funds are moved to what we call Fund 3. It is known as the pre-retiree funds. What this means is that we know that once a client reaches 50 years, which is the approved retirement age as given by PENCOM, you're already approaching your retirement. So your funds are not exposed to the market, as it were. It is about 25% of your funds that are invested. We are very conservative, and then you get returns on investment down to when you retire or you leave that job, and then we process your benefits for you. So once that benefit is processed for you, the remaining funds, after collecting your lump sum, and we spread the remaining for you for a monthly pension, the remaining sum is transferred into Fund 4, which is known as the retiree funds. Also there's also return on investment accruing to your funds. And they will keep servicing you on a monthly basis. Then the next fund is known as the Fund 5. Now, this Fund 5 is for the micro pension plan. What this means is that even you as a trader, your contributions are also subject to growth. They are subject to returns on investment. And so once you start investing with us, once you start saving with us, we also give you good and competitive return on investment on Fund 5. And the last is known as the non-interest fund. Now, this is in accordance with the Islamic religion. Now, in case you're here and then you don't trust probably what we do with your funds, why not? You can move your funds to Fund 6. And it's interesting to know that any moment from now till September, we'll be launching that Fund 6 for all of our clients who are interested in moving their funds to Fund 6. Quickly, the next service that's about is in our customer service and support. Customer service and support. I believe a lot of us, we've had experiences with probably in banks, in other financial institutions, with customer service, where you go there and then you're trying to, do a transaction or make inquiries, and then the customer service is frustrating. Nah, not in Cardinal Stone Pensions. Not in Cardinal Stone Pensions. What do I mean by that? Now, customer service across the country isn't just responsive, we are proactive. What I mean is that if you visit us in Abuja, in our Abuja office, the services you get is actually the same kind of experience you will get in Yola office, in Bauchi office, in Jos office, in Gombe office. It's the same experience. Because our customer service and support team are wired to anticipate needs, resolve issues fast, and make every client interaction a positive, confident building experience. We don't just leave you the same way you come. You entered our office. We ensure we give you a lasting experience. We ensure we give you a wow experience. We ensure that your issues and concerns are resolved within the quickest time. Within the quickest time. And I believe a lot of us on this call can attest to that service that we provide. Next is information and updates. We all know that information is key to making decisions and even more financial decisions. Now, we don't joke with information when it comes to Cardinal Stone Pensions. We ensure that all of our clients are well informed in terms of what is going on in the industry, pension industry, in terms of what is going on in the company, Cardinal Stone Pensions, and in terms of what is going on in your retirement savings account. We keep track with it and we ensure we give you accurate and adequate information and updates. Now, talking about information and update, I'll be giving us, in the next slide, I'll be giving us some recent update as it pertains to the company and the industry. Next is what is known as retirement savings account management. Of course, like I said, our major key product is a retirement savings account. And in Cardinal Stone Pension, we ensure that your retirement savings account is safe in skilled hands, is managed with precision and transparency. What this means is that we are a PFA that has that build our operation on trust. Why? Because we believe that we are dealing with the future of people, of the Nigerian citizens. And so we ensure that your account is safe, is managed professionally, and then transparently, such that we can maximize the long-term value that we offer. Next is our core values. Now, we are a PFA that is guided by principles. And our core value is centered around the acronym EXCITE. What it means that we are excited to serve our clients. We are always excited serving our clients. But let's break it down. EX, that's what does E stands for? E stands for excellence. Excellence. Have you ever been in a place where there's no excellence? It's frustrating. Very, very frustrating. Now, at Cardinal Stone Pension, we strive for excellence in everything we do, meaning that from the moment you contact us or you reach out to us to open a retirement savings account for you, we ensure that we are excellent in our services to you, down to the management of the funds that you have in that account, down to the time you will have needs for those funds in those accounts. So our commitment to high standard ensures that our services, solutions consistently exceed your own expectation. Now, I often tell clients, when clients are telling me, you're just talking, you're just marketing, you're just speaking English, I tell them something. I said, try us. Give us a month. Give us 6 months. Give us a year and see if we don't exceed your expectation. And trust me, at every point, we exceed those expectations in an excellent manner. So our core value is centered around excellence in delivering value, exceptional value to our clients and, of course, our stakeholders. Secondly, customer centricity. What this means is that we have our clients at heart. We have our clients at heart. I mean, we are here because of you. We are here because of every single client. So our clients are at the heart of all of our operation, from retirement savings account opening to fund management to accessing your funds, down to managing your retirement benefits. We ensure that you are at the center of our heart. What this also means is that we listen to you, we understand, and respond to your unique needs, ensuring that we give you a personalized experience that fosters a lasting relationships and build trust. What this means is that we don't just wait for you to come to us. We come to you, we anticipate those challenges, we anticipate those needs, and then we come to you to give you a lasting experience. And trust me, these are giving us referrals on different fronts. Why? Because I believe I'm to ask a question here that if you enjoy the services that our staffs give you, would you refer others to us? Would you refer your colleagues to us? I believe 99% of us will say yes. And so we have also enjoyed this referrals from clients who have seen us giving them this service. Next on our core values is innovation. You know, innovation is the heart of every growing business. Every growing business. Like, remember, I started by saying that our journey to Cardinal Stone Pension has been that of transformation. Now we are transforming at every point. At every point. Why? Because we continually seek new ideas. We embrace cutting-edge technology. We enhance our services and create forward-thinking solutions that meet the evolving needs of our clients. What this means is that we are a digital savvy organization. Now, we have a mobile application that keeps you close to your pension account. Now, this mobile application is one that you see how your retirement savings account funds are growing. You see your transaction history, in the sense that if you have any missing money, you can easily reach out to us or reach out to your employer. You can generate your statement at whatever point. Now, there are times that probably you will need to travel out and the embassy is requesting for a statement of account. Why? I know that can be generated from our mobile application. You also see who your relationship manager is from our mobile application. What this means is that we technologically find ways to keep you close to your retirement savings account. Next is trust. Now, trust is the foundation of every business. I believe most of us will not dive into a business that there's no trust, that is not transparent, that there's no integrity or accountability. So trust is our own foundation in Cardinal Stone Pension. We ensure that we are transparent in our operations. We show you how your funds are going. We tell you how your funds are being managed. And then we are transparent in terms of when it comes to accessing your benefit. your benefit. So Cardinal Stone Pension is a PFA that embraces trust. And lastly, on our core values is known as entrepreneurship. What it means is that we are a system or an organization that encourages our staffs or everyone in Cardinal Stone Pension to take this business as though it's their own, And no wonder all of our staffs, every single person in the company today, gives our what we call personalized services to our clients. That is because of this entrepreneurial mindset that we have in Cardinal Stone Pensions. Next, and as I round up in this particular section, is the recent developments in the pension industry. We're working us through on the recent development in the pension industry. Remember, I told you that Cardinal Stone Pension is a PFA that strives to give you information and updates per time. Now, on developments in the pension industry, one, we have multi-fund structure. I think I explained that earlier. Now, this allows you as a contributor to move your funds from one particular fund to another based on your risk appetite. Now, if you want your funds to grow better and you're in fund 2, you can request that your funds be moved to fund 1. If you're in fund 3 and you are still actively working, you can request your funds to be moved to fund 2. So the fund structure allows to move your funds across different funds for you to, for your funds to be managed, and then you get good returns on investment. Now, secondly, the national identity number. Now, NIN is now required to register for a retirement savings account, carry out your data recapture exercise in case you are an existing retirement savings account holder. Now, what this means is that your pension account is linked to the information you have with the national identity card. And we all know that this is the approved or official ID card that we have in Nigeria as a country. So your pension account is linked to your national identity number. So if you're registering for a pension account, you have to provide us with the national identity card. If you're doing your data recapture, you also have to provide us with your national identity card. And also, if you're processing any benefit at all, you also have to provide your national identity card or slip. Next, the bank verification number. This is also required for registration, recapturing, and payment of benefit. This is all in a bid to keep your account safe, well managed, and ensure that you don't have any issue when it's time for you to access your funds. Next is the micro pension plan. I also extensively, explain what the micro pension plan is. Now, this also is a development from PENCOM, in the sense that everybody it's carried along, meaning that if you're not in a formal employment, you can also be part of saving towards your retirement, and having what we call an awesome retirement lifestyle through the micro pension plan. Next is transfer window. Now, this is interesting. So in late 2020, PENCOM introduced the transfer window. Now, what this means is that before 2020, if you open an account with a particular PFA, you are stuck with that PFA. Whether you enjoy their services or not, you are stuck with that PFA. But PENCOM introduced this transfer window in the sense that you can move your pension account from one PFA to another once every year. You can move your funds from one PFA to another. And so if you are here today and you're not in Cardinal Stone Pension, I believe after this webinar, you will look for us, you reach out to us to transfer you to Cardinal Stone Pensions, and you'll begin to enjoy the value that we give. Next is data recapture exercise, meaning that if your account was opened before July 2019, it is very much possible you have not done what we call data recapture. Like I explained when I was explaining national ID card, the idea of data recapture is to link your pension account with your national identity card information, such that those information are the same, and you don't have any issue. You don't have any issue when it's time for you to access your funds. Now, what are the requirements for this salary capture? Now, you will need to provide us or your PFA with your first appointment letter or employment letter, your national identity card or slip, a white background passport, and declaration of age or birth certificate. Declaration of age or birth certificate. And in some cases, probably your official ID card. And this salary capture will be carried out for you within 3 to 5 working days. Next is a revised regulation on the administration of retirement and terminal benefit. What this simply means is that you don't have to queue to process your benefits anymore. You don't have to wait for too long, 3 weeks, as it were before, to get your funds into your bank account. So if you have any need, especially with cardinal stone pension, or processing maybe your voluntary contribution, your 25% out of job withdrawal, your 25% equity contribution to be paid into your mortgage account. Now, this will be processed within 48 hours, and within 72 hours, you get those funds credited into the right channel, either your bank account or your mortgage account. We have a lot of testimonies coming in from our clients as it touches this particular development from PENCOM. Next is equity-backed mortgage. I believe a lot of us are aware that you can now use part of your pension to service your mortgage facility. What this means is that you can request for 25% of your pension to be paid into your mortgage account that you have opened with the primary mortgage lender, such that you can secure a property, completed building or completed house from any of those mortgage banks. Now we are in the front line of this particular product. We ensure that our clients get this service on time. And lastly, as I round up, payment support services. Payment support services. Again, PENCOM is looking out for situations where we don't have to, struggle, go and queue up in the bank just to make remittances for staffs as employers. Now there are different platforms. We have the Pay Remit, Pay Central, PayPen, where you can easily register your organization on and remit your staff's pension contributions seamlessly. So all these are recent developments in the pension industry. And like I said, Cardinal Stone Pension is in the front line of this development, ensuring that we deliver value to our clients. So finally, as I conclude, now it's important you say yes to voluntary contribution. And it's also important you allow Cardinal Stone Pension walk you through this process of saying yes to voluntary contribution. Why? Because voluntary contribution gives you extra cash. It gives you extra funds and also gives you extra peace of mind. Extra peace of mind. So please, at the end of this webinar, I urge everyone to subscribe to voluntary contribution. Thank you very much for listening. And I will go over to Oluwatosin. Thank you very much.
Thank you so much, Keanu. That was awesome and very, very insightful, right? And one thing actually stood out. I believe when the founding partners of Cardinal Stone Group came up with the philosophy excites, the pensions arm of the business actually took the entrepreneurship part of the philosophy personally. And that is actually transparent in how Iyanu, Stephen, and Osime are taking it super personally to ensure that knowledge is transferred. You could see how they dissected everything that has to do with voluntary contributions, that has to do with the multi-fund structure, with the mortgage, and about the company, and by extension, the group. So thank you so much, my colleagues. Now we'll move swiftly to the Q&A session. And looking through the chat box, the Q&A box, I can see a lot of questions there. That means knowledge is being transferred, because the confirmation that you're actually communicating is when you have attention. So yes, you guys have done so well. And yes, I can see that some of these questions are being answered professionally, which is good. So please, you can still scroll through the Q&A box And if any of the questions that you have in mind are being attended, you can just leave your answers. However, right, I will read out some questions, and our panelists will do justice to them. Although they've been answered, right? I see Akim. Oh, Akim came fully loaded. He has about 11 questions all in one. This shows interest, right? And I see we've had other questions. And one question actually stood out from Jennifer. Where is her question? Jennifer Omozele. I saw that question earlier where she asked for the form. She wanted a link to actually start making voluntary contributions. Please, for clarity, you don't need a form, you don't need a link to start making voluntary contributions. All you need is to approach your HR in your organization, is it the pension desk officer or the HR department, and tell them, please assign the regulated percentage, which is a minimum 10% from employer, 8% from employee. I want to make more contribution. I want a certain percentage of my monthly emolument be added to my pension contributions as voluntary contributions. In some organizations, you have to write to your HR. In some, you just need to inform them either by mail or whatever works within the frame of that organization, and they would immediately compute it and they will start remitting. And upon receipt from the PSSP, once you receive the schedule, the PSSPs are the payment platforms, we will credit your account immediately accordingly. So there is no link, there is no form, it's an interaction between the employer and the employee. Jennifer, I believe that answers your question. So you can just go ahead, even as we speak now, you can contact your HR and tell them, now I know the smarter way to retire. Not just to retire, but to retire well. And that is by adopting voluntary contributions. I hope that does justice to your inquiry and to others that might have similar questions on how to start making voluntary contribution. Sometimes that additional human hair that we don't really need them. Meanwhile, you could actually save those money towards retirement. So make the smart move today. So I'll quickly run through other questions. Akim's questions actually spans the entire discussion. So maybe we'll just take that. And if time permits, we'll take others. But please be rest assured that any question that time won't allow us to address in the course of this webinar, please leave your email addresses or phone numbers. Our team will contact you immediately and be sure that all your questions or your anxiety, whatever it is you have, are duly attended to. So please, you can still leave your phone numbers and your email addresses. We'll definitely reach out to you. Thank you. So the first question from Akim says, who manages additional voluntary contribution? I believe our panelists had attended to that, right? Just to save time, the PFA manages additional voluntary contribution, meaning that additional voluntary contribution is not like the MMM and all that out there. No, it's an additional contribution made towards your retirement and in some parts towards contingencies. I hope that is clear. So the second question is, what is the minimum and maximum value to contribute for additional voluntary contribution? Osime, are you going to take this question?
Yes, I can take the question.
What is the minimum? All right, thank you. Please do justice to this.
The question is, what is the minimum and maximum value to contribute for AVC? The truth is that there is no minimum and maximum value, but the value you want to contribute depends on you, the client. You can decide on any amount that you want to put in, because why we don't peg a minimum or maximum is because at some point you can decide to increase it, and at some point you can decide to reduce it. But note that whatever you are contributing must not be more than 1/3 of your salary, because a additional contribution can only be contributed through your RSA. So whatever you are contributing must not be more than 1/3 of your salary. Thank you.
Thank you so much, Osime. Yes, thank you. So there is no minimum and there is no maximum. However, We've been, the pension industry is one of the most regulated industry, if not the most anyway in Nigeria. So there's a limit to what you can remit. If it's 5 million and above, the pension fund custodian are mandated to report to EFCC such transactions. But besides that, please, you are free to remit even as little as 1,000, 50,000, 100,000, just as it relates to your income, right, and your taste towards your retirement lifestyle. Thank you. Number 3 says, can the AVC grow like the normal contribution? Wow, this is a wonderful question. Ian, Stephen, are you up for this?
Yes, please. Thank you very much.
Thank
So
you.
that's an interesting
You're
question. Now, yes, the AVC can go like the normal contribution, according to the fund category that a particular client is. So the same returns on investment that accrues into your retirement savings account applies to your voluntary contribution. So yes, the AVC can also go alongside your normal contribution.
Thank you so much, Ian. Akim, I hope you are getting this question and you are jotting them down, and your fears towards voluntary contributions are being allayed as we answer your questions. Now, the next question is, now that payments of pension contributions are to go through portals, I believe he's referring to the payment portals, the PSSPs, and uploaded. I'm rephrasing the question, right? Does it affect additional voluntary contribution, and how does the roadside trader go about it? Let me take the liberty to attend this question. Payments for pension contributions, yes, from June 1st, 2025, PENCOM has given a new guideline, and it has been working so far. We are into the 3rd month, and so far it has been able to address challenges of reconciliation, right, which is one of the objectives of introducing the payment support platforms. And for micro pension, in Cardinal Stone Pensions, first custodian is our custodian for micro pension. So you can simply walk up to any of the first bank and make your remittance. You can, as well, use both. You can also remit through Remittal by InterSwitch. So yes, in as much as it relates to pension, there are now smarter ways of making contribution. And for the roadside, that's for the micro pension contributors, if they are not that tech savvy to use the payments of platforms, which are quite easy, our team educates. Our team is quite, like I rightly said when I started this 3rd session, we are very, very entrepreneurial, and entrepreneurship in the side of Cardinal Stone actually is domiciled in the pension arm of the business. So we take our time to educate you, and we make it very seamless for you. So it's either you walk into any first bank as a micro pension contributor, or we guide you on your mobile app. Right from the first bank mobile app, you can actually remit your contribution, your micro pension contribution alongside your additional voluntary contribution. So yes, it's seamless both for RSA, and it's equally seamless for micro pension contributors. Thank you. So I'll quickly move to the next question, question 5. Where there is global meltdown, like we had some years back, is anything going to happen to my AVC? Osime, can you take that? Please. And please, let's not forget that, like I rightly said earlier on, that the pension industry is highly regulated. PENCOM actually puts their touchlight on all the instruments that the funds are being invested into. Your capital is safe. Yes, at some points you could have market fluctuations and all that. But the wonderful thing is this, right? All PFAs, pension, one thing that makes pension stand out is that as long as you live, and even transferring to your next of kin, your pension is secure. So regardless of what is happening there, PENCOM is so concerned about the life of the contributors that even if while you are still alive, you exhaust the amounts in your pension account, there is a certain portion that all PFAs actually maintain to ensure continuity all through the life of that pension contributor. So making pension contributions is a smart way and the safest way to actually retire and not suffer. Thank you so much. So I'll quickly move to the next question. What if I have personal business that I do on weekends or online and it's fetching me huge money that I do not want to waste? Can't I pay funds myself? This question is in two parts. Ianu Stephen, can you please attend this?
Yes, that's a wonderful question. So first, if you have an extra business that gives you good money and you have them and you want to save, first, if you're not into the contributory pension, if you're not registered as a contributory pension scheme account holder, that's a retirement savings account holder, that means you're not working under a formal organization and having an RSA account, you can open what we call a micro pension account and make these savings there, either on a daily, monthly, or a weekly basis. But then, if you are employed and you have a retirement savings account, now funds from outside of what you are earning from the organization cannot be put into the voluntary contribution. And that's why we like I said, we are also financial advisors. We could advise you on where to put the money in, leveraging on the company's ecosystem, that's a cornerstone group, where you can put those extra cash in and then have them saved and invested. Thank you.
Thank you so much, Ianu. You've done justice to that question. So, Akim, in case you have the side also that is bringing in the dollars, the pounds, and the nairas, the bulk naira, please don't waste it. You won't be young forever, right? Cardinal Stone is a group, and we have, just like Ianu has said, we have products across various SBUs that is tailored to actually take care of your needs, regardless of what they are. So if it's to, live the lifestyle you want, even now, besides the pension plan and all that, we'll take care of that, please. So you can actually talk to any of our staff, be it the pensions industry, the asset management, the registrar, or the partner, and they will guide you on how to invest wisely and profitably. Thank you so much. So I'll quickly move to the next question, right? It says, if I'm out of salary job and my personal business is flourishing, do I need any company to pay AVC on my behalf? I believe this question is actually talking about migrating RSA to a micro pension, right? Osime, please, can you speak to this?
Yes, you are correct, Tosin. That is migrating. If he's out of job, what he just need to do is you convert that your PIN to a micro pension PIN, then you can begin to do voluntary contribution into the account. That's just it.
Okay. And in addition, okay, please continue.
Okay, go on, Tosin. Go on, Tosin. Go on.
All right, thank you so much. So just like I said earlier, that question is indirectly asking if I was initially earning in a structured environment where I had my RSA and I suddenly started my own business, I came out of paid employment, can I still continue remitting into my pension account by myself, right? The thing is, you can't remit by yourself. That's the truth. And you can't have two RSAs, because let's not forget that the NIN, your National Identification Number, is your unique identifier. And if it has been used to register for your RSA, you can't use it for any other pension account registration. However, what you can do, right, is to approach any of our staff and they will guide you through what products in the group, at the group level, speaks to your needs and will have it tailor-made and programmed towards your retirement. But please, for pensions, once you have RSA, you can't migrate it to micro pension, except you now register your own company, right? And you start remitting both for the employer and employee. And that will guide you through how you get your employer code, we have you registered on the National Pension Database, and start remitting. But besides that, you can't come out of paid employment and start remitting yourself. But if you were remitting yourself, if you're a micro pension account holder initially, then you can be upgraded to a retirement savings account. Peradventure, you now got a paid employment that pays more than the side hustle you were initially doing. So those are the differences. But regardless of your concerns, regardless of your challenges, Cardinal Stone as a group is there to take care of you. So whatever your even we have the registrars, is it about your will and all that? We have it all covered. So Cardinal Stone is all about right from the cradle to retirement, and even your posterity will take care of you financially. Thank you. So I'll quickly move to the next question, which says, if my salary, if my withdrawal is after 5 years, do I have any financial award for that? Oh wow, this person is reward centric. Is there a word for that? Iyano, please can you do justice to this question?
Yes, so I would say the financial award is that it's tax-free. Because you are withdrawing your voluntary contribution after the cycle of 5 years. What it means is that both the principal and the interest, it's tax-free. So no tax will accrue to the funds that you're withdrawing. So probably that's the financial award the person is asking of.
Thank you so much. I like the business mind, at least behind this question, right? We are all, humans are naturally wired to be selfish and results oriented. So it's a good one. Yes, just like Yano had said, aside the returns on investments, that the Cardinal Stone Pensions investment team work day and night to ensure that it grows. Then you have the tax incentives. So those are wonderful rewards. Thank you so much. So the next question, that's the 10th question, right? Akim, I hope you are taking notes and you are getting value. I hope so, right? So on tax incentives, what will be my excuse if tax collector discovers that my tax payment is below expectation after computation? How can I defend that? Oh, wow.
Justin, let me take
Yes,
that.
please. All right. Thank you so much. Please.
So, okay, there's no discovery whether your tax payment is below expectations, because by the time your pension would have been removed, that's when they do the computation. And that will show, okay, your pension has been removed. Whatever is left is what is being taxed on payee or whatever. That's how you can defend it. Your pay slip will show all those deductions, and that's how you can defend it. So there's nothing like the tax collector will not discover my tax payment is low. There's nothing like that. So you don't need to worry yourself about that, because your pay slip will show all your deductions from your salary, and they would have seen that, okay, you probably would have done extra voluntary contribution and all that. So there's nothing to worry about. You don't even need to defend anything, because these tax
Exactly.
payments are being remitted. So there's no issue about that.
Exactly.
Thank you, Tosin.
Exactly. Thank you so much, Osime. That question was it's actually hilarious, right? But then it's an important thing. It shows that this person has an ethical business sense, right? So yes, you have no fears. You have nothing to be afraid of. The pension industry they are actually the ones that came up with this framework. So there's nothing any PFA does outside the guidelines and policies of provided by PENCOM, and that governs the pension operations. Okay, so if they had promised you tax incentives, just be aware that the FIRS, just name them, they are all in the know, and yes, your statement of accounts is there to guide you. So please fear not. Okay, so I'll take the last question from Akim that says, if I'm out of job and I have both normal contribution and AVC, can I? That question looks incomplete, Akim, but I want to believe that you are saying that if you are temporarily out of job and you have both your normal contribution and your AVC, yes, you can access both. You can request, to access your additional voluntary contribution, and you can access you can request to access your normal contribution. We have, in the pension industry, you can access 25% for temporary access for out of job. If you've been out of job for 4 months and above, you can access 25% of your pension, and you can access 50% of your AVC. Okay, so yes, if you're out of job, you can access your funds. Okay, thank you so much. Do we still have time? We're about 12 minutes. Can we just do like 3 more minutes? Then we have, please, if you have any question or you feel your question has not been rightly dealt with, you can just raise your hand, right? So someone here, Issa Mohammed from Niger State, says, I want to ask, are we going to appointed and what are risk associations? Issa, thank you so much. Your question is not that clear, right? And always we are sending you love all the way from Lagos to Niger State. Please, Iyanu Stephen, you can take up Issa's number and call him for clarity so we can provide answer to his question. It's not clear here. Do we have any hands raised now? Yeah, thank you, Iyanu. None. All right, thank you so much. So we'll quickly have the poll come up and see. Okay, we have one hand up. Tolu Omoyele. Okay, Tolu Omoyele, please, you can, let me see. You can, please, the IT team, can we unmute Tolu? Can we unmute Tolu so Tolu can ask his or her question? We'll take Tolu's question, then the poll will come up, then the final take, and that will be all for now until the next webinar. Okay, the IT team, can we have Tolu? Okay, Tolu, while that is on, you can just quickly drop your question in the Q&A box. I would take it now. Right.
She has already dropped her question. She dropped her
Okay.
question already. I've already replied to her.
Oh,
The question,
yes,
the question is she wants to start a new startup company. I've sent her a phone number to reach out to so that they can take it offline and discuss with her. Yeah.
Fantastic. That's great. Okay, Tolu, so my colleagues said you've been attended to, and yes, we'll take it up from here. Would ensure that we help you achieve your dream, both for your new company and for your prospective employees. Thank you. Please, Bayo, you can drop your question. I will take it, right? I'll take your question. So please, can we have the poll up? Let's see the people that are ready to take up additional voluntary contributions now. Let's see the smart people. And please, you can drop your phone numbers, your email addresses. We'll follow up swiftly and ensure that we help you achieve this. Just as it's like a fire now, it's burning. I know you've discovered that over time, I have just been wasting money and all that. Why can't I just retire well and retire in style? So we'll help you keep the fire burning. We'll keep flaming it for you. And yes, we can introduce you to other smart investments, this Cardinal Stone way. And you don't really need to do much. Let your money do the talking, even now and at retirement. So please, can we have, okay, the poll is up. So while we are at that, kindly follow us across social media. We are at Cardinal Stone Pensions on LinkedIn, Facebook, Instagram, X, formerly Twitter. And yes, we are very active. And yes, like my colleague said, we are customer-centric. We are entrepreneur, we are driven. And we don't rest until we attain that aim to ensure that our customers are satisfied. That is what the Cardinal Stone brand represents. I want to thank everyone. Osime, Iyanu, do we have your final takes before we bring this meeting to an end? Osime, you first.
Okay. Thank you, Tosin. We just want to appreciate everyone who was on this webinar. It's just not coming to be on this webinar. What we expect is start your voluntary contribution. As soon as you leave this webinar, talk to your HRs, talk to your employers that you want to do voluntary contributions, and also talk to your friends to move to us, to Cardinal Stone Pensions. Then you begin to enjoy the benefits of being a member of this family. Thank you.
Thank you so much, Osime. Osime's call to action is profound, and it shows the empathy that is Cardinal Stone personified. He cares about you. We care about you and your retirement plans. Thank you, Osime. Ian Osime, your final take.
All right, Tosin, thank you very much. So I would like everyone to go with this thought. And the thought is the fact that time waits for no one. So there's no point procrastinating, starting your voluntary contribution journey tomorrow when you can do that today. So please, I would like to urge us and encourage everyone on this call. It's important you contribute extra funds to your retirement savings account, such that when you are retired, you retire well, and then you have peace of mind at retirement. Thank you very much.
Thank you so much, Iyanu. That was brilliant. Yes, peace of mind and retirement should be the goal. And yes, it's good to actually train your children, but are children the best retirement tools? That should be another subject for discussion in another webinar series. And thank you so far. You've been there, right? Those that joined us early, we appreciate you. Those that have stayed till the end, we appreciate you for taking out time out of your very busy schedule. We really appreciate you. And yes, just like my colleagues have said, the time is ticking. It waits for no man. Make the smart move today. Thank you. Until we see you next time. From here, it's bye for now.